Hello and welcome to another edition of Market Briefing. I'm Martin Bakkerdax, European Business Editor here at the IB Times UK. It's a macro day indeed across the region. We're looking at equity markets backing up a little bit, but really the story is elsewhere amid the economies. Factory output for the month of December, the Eurozone tells us, was the first rise in about 5 months. Mild as it may be, it does give a little bit more ammunition for those who suggest the recovery for the world's biggest economic bloc is on track, however modestly. Now that's kind of the language that we heard today from Bank of England Governor Mervyn King. He delivers his quarterly inflation report today. He's suggesting that we are on pace for a moderate but sustained recovery here in the United Kingdom. But tellingly, he says he's not going to be able to get inflation back into that 2% target probably until about 2016. Now that's an extra 18 months from his previous forecast, and that was delivered only in November. Effectively, what Governor King is telling us is that inflation is going to be on the Bank of England's target for 7 years. It's an absolutely astonishing admission for a bank that really set out its stall as the defender of price rises here in the British economy. And it does set up a very interesting conversation for the incoming governor, Mark Carney, as to whether or not he'll take a more flexible approach to tackling price rises and, of course, engendering growth here in the British economy. Elsewhere, we are also seeing significant moves in the currency markets. We had no decision from the Riksbank in Sweden with respect to interest rates. I wouldn't normally add that, but we are seeing consistent and persistent concerns of a currency war all around the world. So central bank activity is, of course, incredibly important in and around the currency markets. Now, the reason I say that, of course, is because yesterday we had that statement from the G7, which said that the members pledged not to get into exchange rate setting themselves, but rather let the market take care of that for them. That seemed to be an implicit slap against Japan and its new expansionist monetary policy. That's going to be an enormous topic of interest in the G20 finance ministers meetings this weekend in Moscow. Of course, we'll watch all that with interest. Keep an eye on all of this stuff, will you please, and come back to the IB Times economy page, because we'll cover these stories and a little bit of reaction to the inflation report as well, and hopefully get you something on U.S. retail sales if we can, and if indeed it moves the market. That's it for us. We'll see you tomorrow.